In today's video, we'll go over a sample trading strategy. But before we get started, allocate some of your money into ETFs as a good foundation. Today, we'll cover one strategy you can use for the other 50%. One strategy I like to use is review the stocks under the Wall Street Journal New Highs list. Searching for WSJ New Highs, here it is, and let's take a look at the link. Clicking on the link, we see Wall Street Journal Markets. This is free. I'm going to scroll down. There's usually a huge banner ad, and it says here, new 52-week highs and lows. Today is Friday, so there is new 52-week highs, 95 of them. This is sorted by new highs first in alphabetical order, and then if you scroll down, you'll see the new lows. We're just interested in the new highs, so now we're going to go into Schwab and take a look at each one of these. All right, the first one says A10 Networks, so now let's go into Schwab. Okay, I've logged into Schwab, and I like to go to Research, Stocks, and the important thing here is to go to Return to Legacy View. Now they've wanted to get rid of this, but I found that no other competitor nor even Schwab on the new screen here has the same information as Legacy View. So Legacy View is definitely what I use to look at stocks. So let's go ahead and click here. Now let's type in A10 Networks. So I typed in A10, here it is. The first thing I do is I look at the chart, and how I went here is Summary Total Return. So one, does it beat benchmark? So according to this chart, A10 is the blue, S&P is the orange, and the ETF it's compared against is XLK. So it looks like it pretty much beats benchmark, or at least follows it. The second criteria I use is I look at the 1, 3, and 5 year return. So here 1 year is returning 76, 3 years 96, and 5 years 207. So that all looks good. Then I scroll down and just do my final sanity check, which is, does it beat the S&P or the benchmark? So scrolling down on the same page, price performance comparison, it says A10 is returning 28% in 1 month. S&P is 9, so it's beaten the S&P in the 1 month. 6 months, 57%, S&P is 6, and 1 year, 74%, S&P is 34. So I would definitely buy this stock. Then I'm going to jump over to ThinkSwim, which is their trading platform, and just do one more sanity check. And I prefer to buy in ThinkSwim because it's just the way I have it set up, it's just one click. So now I'm in ThinkSwim, and the first chart that I've enabled for myself is since this stock has been in inception, and the second one is the 90 days of this stock. And I've also enabled these indicators here, which is the Dow, S&P, Russell, and NASDAQ. So what I like to see is within 90 days, has this stock, which is this Christmas tree candlestick, has this stock beaten the benchmark? So we can see here that within 90 days, it has beaten the benchmark. So I would definitely buy the stock. Now I'm going to do this in ThinkSwim. Now I'm going to buy the stock. So I have some templates for myself that I've created. So I'll just use one of my templates here. And reading this order, it says buy 22 shares of this stock at market. Now you could also place a limit order, which is you don't want to buy it for $27, you want to buy it for $25, etc. But for this example, we'll just say market. I have a second order here that says when I buy this stock and it goes up, but then it drops by 15%, I want to sell. So my risk tolerance here is 15% since the high of the stock. And I don't really need this third order, but I like to just cover myself. And this third order says on my buy at $27, if it drops at 10%, also get me out. So the most I can gain on this stock is infinite, and the most I can lose on this stock is 10% as soon as I buy it, or 15% on the trail. All right, let's take a look at the next one on the list. I'm going to choose this Acadian Asset Management. So let's go into Schwab and take a look at it. All right, let's take a look in Schwab. So I'm looking at the Acadian Asset Management, which was the next one in the Wall Street Journal New Highs list. So blue is the stock. It's looking pretty good on the chart. It's beating the S&P and beating the ETF that it's compared against, XLF. Now let's take a look at the 1, 3, and 5 year chart. So 150, 182, 190, those are pretty good returns, but let's just do our sanity check here. So scrolling down, price performance comparison. AAMI in 1 month is returning 31%. S&P is returning 9. 6 months it's returning 43%. S&P is 6. 1 year is 150. S&P is 34. So to me, in this new strategy, this would definitely be a buy. Let's take a look at this in ThinkSwim. Okay, we're in ThinkSwim, AAMI. Again, this is beating the benchmark pretty recently, but I'm going to go ahead and place a buy order. So again, just my template. I'm going to buy, for instance, 22 shares, market, sell 22 with a trail stop in case it drops 15%. And then my cover, my butt order is 22 with a 10% stop. You don't really need the third, but that's just me. Let's take a look at another stock, which is ServiceNow. We can see that it was beating benchmark, but it's been dropping lately. 1 year returns negative 37, 3 is positive, and 5 year it is negative. Maybe questionable, but let's do our sanity check by scrolling down. And here we can see that 1, 6, and 1 year are all negative versus had you just put it in the S&P, you would have been positive 9, 6, and 34. And really the name of the game with choosing stocks is you want to beat the S&P line. If you can't beat the S&P line, then just buy the S&P. Now it's interesting because in Think, we can see that it has almost always beaten the benchmarks, Russell, Dow, NASDAQ, S&P, since inception. But lately, and this is because of Claude and, eating your lunch or SaaScopolis, we can see that in the last 90 days, it's actually been way below the benchmark. So not every stock always outperforms. Sometimes they have some down days. And like I said, the name of the game here is we want to beat the S&P. We only have limited amount of funds to invest. So we definitely want to invest in those items that are returning positive and not negative. All right, last example. I have a friend who just loves this apparel company, and they see it on TikTok and they hear about it, etc. And it doesn't matter where you hear if the stock is good or not. Just please always do your due diligence. Again, if it's not beating benchmark, buy the benchmark. So the conversation with a friend is, let's do a sanity check and see how this stock is doing. At some point in 21, 22, 23, it actually was doing pretty good, but then it dropped. In 24, 25, and 26, you would have actually lost some of your money, if not all. So here, 1, 3, and 5 year, just looking at the charts, negative 33, negative 54, and negative 48 in a 5-year return. So let's scroll down and see how it's doing against the benchmark. So in 1 month, it started to go up, so not bad. But again, if you had put in the S&P, you would have gotten 9% versus 2. In 6 months, it's gone down, S&P is up, and in 1 year, negative 33 versus S&P is 34. So again, name of the game is we want to beat the benchmark, and if we can't beat the benchmark, then let's just buy the benchmark. Now, an objection to this method is, but you're buying stocks at the high. That's true, but I found that highs make new highs. And if I bought at the high and it drops, I have a trailing stop loss on it to minimize my loss or make a profit and manage my risks. Another question I get is, how do I buy stocks at a low with the anticipation of it going up? Well, that's the $1 million question. And if we had the answer to that, we would all be rich. Maybe you can read the earnings report, look at the PE ratio, look at the moat, read the balance report, etc. But this isn't a guarantee either. For example, look at NVIDIA or what's happening in early 2026 with Claude affecting SaaS companies. These companies have beaten analyst projections, yet some have dropped negative 40%. In 2025, I started using the Wall Street Journal New Highs list. I was buying speculative stocks in the summer like Oklo. Then in the fall, new highs were gold, silver, mining companies. Let's take a look at a sector chart. Each year, a different sector is beating the other sectors. And in this example, you can see where the sector is compared to the S&P. So this strategy is to move with the market. This is just one strategy example. And in a later video, we can cover other strategies so that you can kickstart my wealth. I've used Schwab in my examples. So if you're considering opening an account at Schwab, use my referral code. I get nothing from Schwab. I just prefer it as a trading platform.